Welcome everybody to the full year results for the WHI Group to the year ending 31st of March 2022. Please take note of our usual disclaimer and please take time to read it. My name is Phillip Wale. I'm the Chief Executive Officer for the WHI Group, and I'm delighted today to be joined by Michael Bishop, who joined us as our new Head of Group Wealth Management in February this year. He joins our existing ExCo team, where other new joiners include Simon Jackson, our new Chief Financial Officer, and Stephen Belenwu, our new Chief Risk Officer and Head of Compliance. And I'm delighted to have all of them on board for the new team. There's no doubt this has been a year of two halves, with the first half being successful as was the year before, and the second half being most challenging for all participants within the industry. Despite this, revenue has grown and we've continued to be profitable. Group assets under management have also grown, and we maintain a strong cash position. We should now look at the divisional review, and at this point I would like to introduce our new Head of Wealth Management, Michael Bishop.
Thank you, Philip. I'm delighted to have joined WH Ireland and the team at such a significant point of transition in the business. The Wealth Management division reported a 19% increase in revenues to 15.8 million, now reflecting the contribution from the Harpsden business that we acquired in 2020. This revenue growth is largely driven by a 35% increase in wealth planning and management fees, in spite of a fall in commission income. We are now a fully integrated investment management and financial planning business, operating out of 4 offices in London, Manchester, Henley and Poole. The underlying quality of the business continued to improve, with increases in our discretionary assets, fee income and inflows. In the current financial year, we have made significant progress towards our goal of sustained and meaningful profitability in the division. We're achieving this by addressing operational and cost efficiencies, growing our assets under management and our wealth planning advisory business. We're also enhancing our client investment proposition and philosophy under the Chief Investment Office. We are collaborating closely with our colleagues in capital markets to establish cross-referral opportunities. And with our cost base corrected, we are selectively recruiting and assessing further potential corporate acquisitions. Overall, I'm very encouraged by the work that we've done thus far and recognise that there is much more to do. In the end, we seek to build a genuinely differentiated wealth management business. So now I'll hand back to Philip to talk more about the capital markets.
Michael, thank you. And now it's time to look at the review of the capital markets division for the same period. As I said before, the first half of the year was very successful. The second half very challenging, not only for the industry, but for us included. Despite that, we've seen revenue grow. Very importantly, we've seen the addition of a number of new corporate clients, taking the number at year end to 88. It's worth noting that as of the time of the published results, this number's grown again to currently stand at 94. This has allowed us to climb 3 places to be the number 2 overall ranked broker on the AIM market. During this period of time, we continued to complete a number of successful equity transactions, and this included 5 IPOs. We've also seen an increase in our retainer and transaction fees, but this was offset by a reduction in trading and commission income as the difficult markets took their toll on our overall revenue in the division. And lastly, assets under management in our ultra high net worth and family office division also grew to £0.7 billion. If we now look at the current trading and outlook, we continue to perform well against what continues to be a testing backdrop. Markets remain volatile with lower volumes, and this is impacting not only our trading income, but clearly the amount of transaction levels that can be completed. Despite this, as I've said before, we continue to grow our overall corporate client list, and this is our intention to continue to do so during the next financial year. During this period, we also saw the addition of our debt capital market team. They joined us in April 2022, and they have already completed their first successful transaction for the new financial year. We continue to aim to return the company to sustainable profitability and grow the business, and most importantly, reward our shareholders. Overall, we are ready to take advantage of better conditions later in the year, given our strengthened and improving platform across both divisions. In summary, I believe WH Ireland has had another year of underlying progress across both divisions. I am confident that the business will continue to make progress to enable it to build from its solid foundations once a clearer outlook is seen. I'd like to thank you for taking the time to look at this video. I'd also like to thank my colleagues and our shareholders for their continuing support. I look forward to giving you a further update after the September half-year end.